if you're a buyer in today's market, you've got to see opportunity. If you don't see opportunity some way, somehow to improve upon an asset that you might consider purchasing, you're probably not going to be the likely buyer.
From cornfields to high rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Rick Krause here on the show. Rick, welcome.
Thank you, Neil. It's good to see you again.
Good to see you. Say for the audience to say, who are you, where you're from, what do you do?
Well, I grew up in Skokie, Illinois. I am the son of two refugees from Germany. They came over. My father came over at the age of 13 with a sister on a boat by themselves. My mother came over when she was 9. They met at Roosevelt University in Chicago, got married, and set up life in Skokie. Basically, I went to school in Skokie, graduated in 1978, and headed to Drake University, and have been in Des Moines ever since.
What drew you to Drake?
There was a lot of students in Chicago suburbs that were attracted to Drake. Quite a presence there. In fact, 40% of student enrollment at Drake came from the state of Illinois. Most of that was from Chicago. I knew some people that had come to Drake and done well. I wanted to study business and made that decision. We didn't go through a lot of due diligence back in those days to figure out where to go to college. You basically had 2 or 3 choices and you decided. So after graduating in 82, I was contemplating whether to create a professional life in Chicago or stay in Des Moines. And I just realized that living in Des Moines was a lot easier. You know, this is back in the 80s in Chicago. At that time, you waited in line for everything, and it's only gotten worse. Right. So I think Des Moines was a great place to start a family and to create some net worth for us. So I just stuck around, worked for several employers. In 1988, I purchased eightplex in Waukee, back when Waukee was a little hamlet of 2,500 residents.
It had to be a stretch from, call it the edge of Des Moines and the burbs of Des Moines to Waukee back in the day.
I mean, I remember having to come down, I think it was Hickman Road at the time, I'm not even sure, and I had to get off. Hickman Road went through, but if you didn't take Hickman, there was no other way to get to Waukee. Right. University didn't exist, at least not that far west. Sure. So anyhow, at that time, the only people that were interested in real estate in Des Moines were Bill Knapp and Marvin Pomerantz. I'm exaggerating a little bit, but nobody was interested. And I saw an advertisement in the Des Moines Register classified sections under income property for this eightplex for $220,000 with $20,000 down. I could purchase it on contract from a guy who lived in California. So I made that decision, purchased it right when I had I think at the time I had a 2-year-old and a newborn. So we had a 2-year-old and a newborn. But anyhow, I remember cleaning apartments when there was tenant turnover and having my wife help me, and the kids stay at grandma and grandpa's. And my wife told me after about 2 cleanings, she said, I'm not doing this anymore. So anyhow, we found another way. But about 3 years later, I purchased another eightplex in Ankeny, borrowed against my own 401k to do that. And then realized that Ankeny was too far away to own an eightplex, and sold it 2 years later and exchanged it into office building in Clyde. Back then, hardly anybody knew what 1031 exchange was, including myself. But I found out and made that transaction. So beyond that, I really didn't purchase any property until 1999, in which at that time I purchased 3 properties, and I just was looking for value. I didn't have in my mind that, I wanted to purchase a property a year. I just purchased property when I saw a real opportunity. And it turns out that the times that I purchased property when real estate was waning in value, the properties there was a little recession in commercial property. So I bought 3 properties in 99. I was really starting to do more, and I was being contacted by a lot of commercial brokers at the time, still working full-time
So working a job.
Selling industrial packaging systems at the time. I got a little frustrated with a lot of the commercial brokers in Des Moines. They didn't seem to know much about investment properties. They knew a lot about leasing, office, industrial, and retail, but not much about investments. So I decided that it was probably a good opportunity for me to get into the business and focus on income property.
Yeah.
So in 2001, September 1st, 2001, I made the plunge, and 11 days later was 9/11. Which turned out to be a terrible time to get into the commercial brokerage business. So I struggled for the first year, like everybody else did, who made $19,000 in commissions, which, was quite a shock, but turned out to be really a good time to get into the business.
Why?
Well, because it's not easy. There was activity out there, but really one of the hardest things about getting in the commercial real estate business is to figure out which opportunities to pursue. There's always opportunity. Some of them are dead ends and some of them are real opportunities. So, the next year I tripled my earnings, and the next year even considerably more. So it only really lasted about a year for me, the downturn. And then it seemed like it accelerated through the early 2000s. And I didn't buy any property at that time. I was busy selling real estate, brokering real estate.
Yeah.
Right. But then 2008 hit. And at that time, I was actually working for Iowa Realty Commercial, and I switched. I went over to CBRE Hubble because I felt like I had better opportunity there.
Sure.
That was October 2008. We know what happened.
Right.
Just before that.
Right.
And so anytime I made a move, beware. But anyhow, I came over. In fact, I was running the Chicago Marathon in October of 2008, and I'm looking around at all these mainly condo developments that are 50, 60, 80 stories high, that are the construction activity had just stopped, halted. Mm-hmm. And I'm looking around as I'm running, and I'm thinking, this is going to be really interesting. So it was. I remember back in that day, you could probably buy, you could buy a 1-bedroom condo in downtown Chicago with a prime location for $130,000. And those are probably selling for $700,000, $800,000 today.
Yeah.
And developers were concerned about who was going to pay those condo association fees. So there was still risk involved with that, but I wished I'd bought some. I didn't. I bought some other commercial property in Des Moines that it was the greatest buying opportunity in my lifetime.
What did you buy? Maybe more specifically, what asset classes were you buying?
At the time, I bought a couple of retail properties. I bought a flex space property, bought a new house. So there was just plenty of opportunity. If you saw it as opportunity, most people weren't interested in participating.
My question to you is, when the days are darkest, the opportunity is typically the brightest, but most people don't see it that way. To sit on the sideline, there is an action because it's a scary moment.
Sure.
How did you get through that? Have that intestinal fortitude to forge forward and risk and transact?
Well, I felt like I knew what good opportunities were. I felt like this was a period in time that wasn't going to last. Some of the assets that I acquired were maybe 70% leased and maybe somewhat mismanaged even before the Great Recession. So I just had confidence in myself and knowing what was good quality property. Real estate goes typically in 10-year cycles. 1999 was a part of a downturn right when I purchased other property. The late 2000s was a downturn. We didn't really have a downturn until the next 10-year downturn was caused by COVID, which was something we'd never seen before either. So before then, we had the S&L crisis back in the late 70s, early 80s. Right. So there was always something that impacted the real estate market, and it always came back. Now, today is a little different. You hear a lot of doom and gloom about commercial real estate today. Well, most people that are in the know realize that, yes, there's some difficult sector, or, the office market is a tough sector, and particularly in the central business districts. Right. But the rest of the market is doing quite well. Yes, interest rates are having an impact, but we as a group, as our brokerage group, my team, which includes Cy Fox, Ray Hamilton, and Clark Matthews, who started with us April 1st, is growing. And the reason we're growing is we're working hard to find opportunities in the market, there's a scarcity of listings on the market.
Correct.
Because of that, people are still willing to pay a premium for these properties. We're expanding our market. We are doing more business in rural parts of Iowa, a lot in eastern Iowa. We have guys on our team that are licensed in South Dakota. We're doing business in Sioux Falls.
Yeah.
So I think the theme of anyone in the real estate business is conditions will change. Those that succeed will adapt to the conditions. I was buying property in 2009 through 2012 because I wasn't doing a lot of brokerage business. I was morphing into partly because the opportunity was as a buyer, not as a broker at that time. When I was trying to sell real estate or broker real estate in that period of time, nobody wanted to sell. The only people that would sell were those that were in trouble or if you were dealing with a lender. And I always said I was working twice as hard to start with, making half as much money because there just wasn't an opportunity for a 3 or 4 year period.
Correct.
So I adapted, partly because of that, but partly because there were opportunities as an investor.
I'm curious what you're seeing in today's environment. You'll staying in that theme. What I heard you say is naturally there's not a lot of listings, there's not a lot of inventory for sale. The stuff that does come out, people will pay a premium for that. So I'm curious, you at a personal level, and we all have different buying criteria, different parameters. Just because somebody buys and somebody passes doesn't necessarily make it a good or bad deal. It's just an opportunity for that particular buyer. I'm curious about what you're doing in your buying environment today.
Well, I'm more focused today on demographics more than ever. I think if you're a buyer in today's market, you've got to see opportunity. Mm-hmm. If you don't see opportunity some way, somehow to improve upon an asset that you might consider purchasing, you're probably not going to be the likely buyer. Mm-hmm. There's a shortage of housing.
Correct.
And, because of that, I think, in particular, say in the Des Moines metro area, Des Moines metro area is the fastest growing city in the Midwest.
Right.
It almost doubles its next in growth. I think it might be Louisville or Omaha. That's, the second fastest growing community. Because of that, we have a lot of demand for multifamily housing. I'm probably looking more at the C properties today than A properties because there's a lot of development going on at Des Moines as well. So in fact, in 2013, I put together a partnership that developed 198 units in Clive. And at that time, there was a lack of multifamily property in Des Moines. There was a lack of development in Des Moines. I was in tune to that because I was selling multifamily property, and I saw an opportunity that very few others were acting upon. We built the property with Hubble at the time, have since owned it as a group and done quite well. Since then, there has been quite a bit of multifamily development in Des Moines, particularly in the western suburbs and downtown Ankeny. And so that market has changed. So I haven't been a fan of development for several years. There's a lot of risk with development that a lot of people don't realize. Come in, you get a construction loan at an interest rate that, is fixed for maybe 18 to 24 months. And then you've got to arrange permanent financing. Well, what happens when interest rates have changed like they have right now?
Correct.
And, 2 years ago, we were at 4 or 5%. Now we're at 6, 7%. And the other thing is you don't know what the demand is going to be in 2 years. It takes 2 years
to deliver the product.
Correct.
Right.
Correct. So there's a lot of risk in development, which I don't mind taking risk, but sometimes when you're risking other people's money, there's a lot more pressure.
Correct.
And I wasn't always comfortable with taking that chance.
Hey, Iowa investors, this is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
How did being an investor first help you when it came to serving as a role as a broker?
Well, that's a great question. I got into the business because I didn't feel the other brokers at the time knew much about investment property. They never seemed to give me the information that I was really looking for. Income statements, rent rolls, basic information.
That an investor who's going to buy an investment product is going to base their decision on.
Sure. So I would ask them certain questions, and all they did was they put property in front of me that happened to be on the market. They didn't know why someone might be interested in purchasing that property. So I saw an opportunity to reach those people. And my goal was to focus on investment property overall. It turned out that it was easier for me to get involved with the multifamily sector. And I just started to try and reach out to other owners. And the reason why it was easier for me is very few of the multifamily property owners even knew any commercial brokers at the time.
Okay.
So I created newsletters that I physically mailed the 4,000 apartment property owners, and started out with Polk County, expanded to several counties in the area, and did all kinds of seminars. Anywhere I could speak that was a multifamily oriented group, I was there and did that. And so all of a sudden I had people contacting me. I provided them with information about the market, and they responded with calling me, and I was able to receive calls rather than make calls.
Right.
Business in any real estate field, the more business you do in a sector, the more exposure you're going.
That's right.
So it was actually pretty easy to reach the multifamily once I started doing these newsletters, the seminars, et cetera.
Adding value to them.
Adding value to them. And I remember, 10 years later, I had brokers come up to me and say, when you started to focus on the multifamily, we all thought you were crazy because there wasn't enough of a market for you to sustain yourself. Now the market has evolved into in 2015, in Polk County, there was $50 million worth of multifamily sales that took place. In 2021, it was $500 million.
Wow.
So the reason being, there's more money out there pursuing assets today than there ever has been. Des Moines became a market that others from outside the state were interested in. Most of the sale, we sell a lot of 50 plus unit properties. We probably control 60+% of that market. It does happen, but more often, 80-90% of the time, it's from somebody out of state. And Iowa is viewed as safe. There are rent control laws that are being implemented across the country that are not friendly to investors. Every time you see more and more of that, it helps Iowa become even a more sought after market. And then with the growth that we've had, there's just a lot of interest in Des Moines, Iowa, or in Central Iowa.
I agree with you. Between what the state has done to create a friendly economic, friendly landlord environment, and among many other things that allows the population in this multiple cities in the state to grow. There's a lot of things I like here.
There is.
And probably why you see out-of-state dollars being attracted here. We still are in a place where you can, although maybe not as much as cash flow or yield as some of us would like to see, but in comparison to across the country, still an environment that outshines a whole bunch of other places, certainly on the coast.
And because of that, we've had appreciation in this market.
Correct.
That we haven't seen, 15 years ago, you bought property for the cash flow. You hope for appreciation. Yeah. You obviously were reducing debt as you went.
Correct.
But you couldn't count on appreciation. Today, you can count on significant appreciation. You got appreciation back in the day if your rents were to increase over time.
Correct.
But anyhow, it's been an incredible run. I think it will continue. There's talk about rent control nationally. I don't know that will happen, but just to give you an example, one of the worst rent control laws passed in the country is in St. Paul, Minnesota. Right? They enacted a law about 2 years ago that makes it so you cannot increase rents more than 3% annually. Now, in the past, when rent control laws have been enacted, when that tenant moves out, you can raise the rent to the market. Well, the St. Paul law does not allow you to do that. You can only raise your rent 3% annually, whether it's a new tenant or an existing tenant. What happens is there's no incentive for these landlords to improve the properties.
Correct.
And so your housing stock ends up whittling away.
Right.
You're not going to spend $5,000 to improve an apartment so you can raise the rent 3%. So you're going to do that so you can raise the rent 7-8%. That formula won't work anymore.
Correct.
So I think they're realizing that in St. Paul, and they're starting to relax some of the features of that law. So that's probably one of the worst rent control laws in the country. But when that happens in the Twin Cities, those investors are going to shy away from that market and look to other places like Des Moines.
Yeah, they move their dollars, and I think it has to impact the tax base of that city as well. Yeah, at some point,
Absolutely.
Right? You're putting a restriction on rent, therefore you're putting a restriction, ultimately a cap on what that value could be worth in a time frame. And therefore, you're reducing what that taxable property is, what that assessment's going to be.
Sure.
Tax the dollars back at the city level.
There's some things in Iowa that we've done. Multifamily property used to be taxed as commercial property.
Right.
A house in Iowa typically gets a rollback of about 45%. So they're only paying 55% of the taxes that, say, a commercial property would pay.
Right.
In 2013, they changed the law in the state of Iowa where multifamily property received the same rollback that a house did. And then they phased it in over 10 years. Well, it's now fully phased in as of 2023. So that's been a big benefit to values for multifamily property. And it's put them on an even playing field, really.
True.
So
I'm curious, just going way back here, being the son of first generation immigrants, what was that life like? What was growing up like? How did it impact your work ethic? What was distilled from that experience that gave you ultimately an advantage probably in the environment?
Well, my father, after he was an engineer, pretty smart guy. My parents both were very hardworking, but they were Europeans. And this is maybe not politically correct to say this, but that Europeans, or back then, they weren't child focused. In America, we're very youth focused.
Right.
And so my parents let me do whatever I wanted to do. They didn't believe in youth sports at the time or organized youth sports. Yeah. But I had a lot of time on my own. And of course, that was part of the culture back then, too. But my father got into the multifamily property industry when I was probably about 12 years old. I did some odds and ends work from sanded floors, wood floors, and did some painting. So it gave me a good foundation. When I bought my first property, I obviously bounced some things off my father. My father was a tough guy. I mean, he was not easy to convince of anything. When he didn't give me any good reasons why not to do it, I took that as that must mean it's a good opportunity. So I got as full-throated an endorsement as I could to go ahead and purchase that property. But it helped a lot. So hard work. I mean, I worked basically from 28 years old to my whole life, really. I've worked multiple jobs. I've kind of been the gig economy before there was a gig economy.
Yeah.
So, I've worked hard and take risk, but not a ton of risk.
The environment's ever changing globally, everywhere, but certainly inside the real estate environment, and you have to evolve. This industry has evolved and continues to do so.
Yeah. I mean, those that evolve succeed. My career is a good example. When the brokerage business wasn't there, I was buying property. Even though the economy was recovering, when there was a need for multifamily housing, I was developing 198 units. Today, there's opportunity out there if you're willing to take risk. I think the problem today is there is tremendous opportunity in the office market, but I don't know that we're going to see that market recovers for quite some time. Since COVID, working from home was something that was trending.
Yes.
Even before COVID.
Right.
COVID accelerated everything that was good. Amazon, Facebook, working from home, and anything that was waning got kicked hard to the curb by COVID.
Right.
So the office, we've always had the technology to work from home, or I wouldn't say always. Before COVID.
Yes.
It just made that so it's a reality. Now companies, even though they want people to come back to work, are struggling to do that. And I think the economy will improve and we will absorb the office space, but it's going to take a while. I mean, what's going on in downtown Des Moines is very interesting. You've got two significant properties that are, planning to convert to multifamily.
Right.
Whether that will actually happen at the end of the day, don't know. You've got Meredith sold one of their office buildings to Mid-American Energy, who's moving out of the Ruan Center. Because of that, Ruan Center is now converting some to multifamily. Right. You've got the city of Des Moines purchasing half of Nationwide's property downtown, which I think is a great opportunity for the city of Des Moines. They can fill it. Correct. They're paying $6 a foot. Correct. For office property that probably cost $250 a foot to build 15, 20 years ago. Right. And now you've got American Equity relocating to downtown Des Moines. Right. Because there's tremendous opportunity. Probably, rents are coming down and things will happen and it'll evolve. And I'm somewhat optimistic that downtown Des Moines will do well. But I don't know that I want to be purchasing an office building at this time.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
There's always ebbs and flows in the downtown environment, right?
Absolutely.
There's some sort of transition taking place, and it just seems like we've got this one right at the doorstep, and it's going to be interesting to see how it comes together. Converting to multifamily, it sounds fantastic, but it's not cheap to execute.
You'd almost could start over from the ground. I wonder.
Yeah, to scrape it and go ground up, and is it less actually? Correct.
I don't know. I mean, there's some incentives to build, to repurpose these properties, and without those incentives, I'm not so sure it gets done. Another interesting transaction in the Des Moines market is the Wells Fargo building out on Westtown Parkway that just transacted at the end of last year. Yeah. Wells Fargo has vacated that property. They've consolidated down to their Jordan Creek facility, and that 400,000 square feet sold for about $38 a foot.
Ryan Wiedersing was just here a couple weeks back, and we talked about that in detail. It's going to be an interesting one to see how it comes along, because $30 a square foot is a screaming steal.
It's a steal. Yeah. Overall, I think it's a $16 million price tag for that property. It's an absolute steal. The problem with it is, and I don't know what Ryan's got going on. He might have it all figured out already. It's just putting the pieces together, but it's probably costing them over $500,000 a month just to keep the lights on.
Correct.
So, if you go a year period of time with minimal activity, that's another $12 million you've got in it now, and the cost of that capital as well. So
you got to flow it. That one is one I'm watching very closely. Out of anybody in Des Moines so far, he took the boldest move.
Sure.
On an incredible property. So I'm excited to see how.
I mean, absolutely could be a home run. Yeah. It absolutely could. But there's a lot of risk there.
Does it feel, does the office sector specifically feel a little like the global environment of 2008? 2008 was every asset. Today, it feels like there's one sector that is blighted. And so you wonder who's going to step in and put their toe in that water and go take the risk. And how does that play out in 3, 4, 5, 10 years?
I mean, the problem with the financial crisis was that there was so much easy money back in those days that impacted every asset class. Yeah. And you had to have what needed was a heartbeat to get a loan back then. Right. Liar loan. There was no income verification back in those days. Right. So a lot of us, never in my wildest dreams did I think we'd endure the financial crisis that we did. But a lot of people in the industry knew that this wouldn't last. So
you just can't. These loans, you just can't continue with these loans and not have recourse.
Right. And so that was a pumped up market that the government encouraged. Today, things make more economic sense. Yes, we have issues with, COVID was a black swan. Right. Nobody saw that coming. Right. We were wondering at the time, because we typically track every 10 years, there's a recession in the real estate industry. And we're wondering what's going to cause the next one.
You had the longest bull run in history.
Yes.
Correct.
Yes.
When's it coming? It's going to be knocking on the door.
And we didn't know what it was going to look like. Yeah. Never in our wildest dreams did we ever think COVID would be what changed things. But COVID other than the office industry, everybody was caught off guard. And yes, the government spent so much money to float the economy for a period of time. We had no idea how it was going to impact things. We didn't know as, multifamily properties, whether tenants would be able to pay rent.
Right.
The government put $3,000 to $4,000 in every person's pocket shortly thereafter. And all of a sudden, people wanted their own home, or they didn't want to live with a roommate, or because they were at home 90% of the time, they didn't want to live in the basement of their parents' house. And it turned out to be a big boom for the housing industry, both the rental and homeownership. So yes, there were still issues. Yes, there were still people that were losing their jobs. But, for a majority of people, that COVID probably did more for companies and people's personal development. Unless you owned a restaurant or a bowling alley or a bar, you were helped by COVID. So
a lot of money went out, and ultimately, like any ever-changing environment, it created opportunities. And several people have executed on some of those opportunities.
Sure.
And we'll see if that turns into an office opportunity or not.
Right. I have owned office property as an asset. I don't currently. Glad I don't. But I always felt like when the economy was doing well, office market went up with it.
Sure.
When businesses were opening, the office market did well. So I think it will recover. I think this will take maybe up to a decade, and properties will get repurposed and things will evolve as they always do. So some office property owners will probably sit on their inventory for a couple of years and let other office investors offer rent at 40% off where we were, and wait for inventory to thin out.
Yeah.
And so we'll see.
What are you most excited about in 2024?
Well, what I'm most excited about is more on a personal level. I have 6 grandchildren. 3 of them live 2 miles from our house, and my other 3 live in Oslo, Norway. And they are in the process of relocating to Seattle, Washington, which is, instead of being 7 time zones away, will be 2 time zones away. Instead of 17 hours of travel, will be 7 hours away. So they're actually in the process of moving right now. They're going to be at our house in Des Moines later this month and spend most of August here while they relocate. So that's what I'm most excited about.
That's terrific.
So as far as business wise, I think there's opportunities out there. I'm more excited. I partnered with some younger people to invest. I'm kind of excited about helping them have success, and me taking a step back a little bit and be involved, but not have to be the go-to person.
Sure.
So, there aren't a lot of properties out there, but we're still looking. So,
ready for the final 3 questions?
Sure.
If you had one piece of advice for your 20-year-old self, what would it be?
I would say fail more often. And, my philosophy is you never get it 100% right.
Yep.
If you get it 80% right, you'll do well. So I wish I had taken more risks earlier in my life. But I also say I have this philosophy that if I tell people that if I knew now what I knew then, I wouldn't be half the success today. And being naive can help you. I'm not saying there's a benefit to being naive, but knowing too much gives you reasons to pause. And I think you need to take some risks in life. And the bold typically do well in American economy.
2 books that changed your life.
2 books that changed my life. Factfulness, which is written by a Swedish professor, Hans Rosling.
Okay.
Basically, we're being fed all kinds of information on a daily basis about how horrible things are. Or not horrible, but, typically the information we receive is negative.
Yes.
There is so much good going on in this world. I mean, the poverty level is considerably less than people think it is. Life opportunity in Africa is so much better today than it ever has been because of communications that we have today. Nobody puts in a landline phone system anymore. With the internet, with satellites, cellular coverage, we can transfer all kinds of information across the world very inexpensively. People are getting educated. The women far fewer women today are being kept down than in the past. So there's a lot of great stuff going on in the world. Other books, Leadership, Self-Deception, a book written by the Arbinger Group. changed the way I receive information. We all have our biases. One of the problems we have today is people have too many biases. It taught me to keep an open mind and to, there's good and bad in everything. If you want to focus on why you don't want something, you'll find that.
Correct.
If you want to focus on why you think this is a good opportunity, you'll find that. But to see it on a balanced basis is really helpful. And I think most good business people are open-minded. I try and do the best I can. Again, we all have our biases, but be a better listener.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. Now, you know you have multiple businesses, meaning the brokerage and also the investment side of things. So I'll let you answer however you choose. What 3 things do you need to know every month to know how your business is running?
Well, I don't know that there's any, I could pinpoint any one of 3. I mean, from a brokerage standpoint, I guess I like to have access to all the assessors' websites to see what's transacting, what's going on. Maybe help me look at the pipeline of, what might be an area to focus on. As far as my properties go, one of the things I've always looked at or tried to as I've gotten older is demographics. I mentioned that earlier. Yeah. And so to know where the city of Des Moines fits in with the rest of the Midwest, or to know the growth in this area would be helpful in making investment decisions. Obviously income statements, rent rolls, that's helpful information, but that's a picture in time. To know bigger picture things, to know whether it's a good time to invest in whatever asset class I'm looking at. Really, demographic information is helpful.
Rick's fantastic conversation. I knew it was going to be great when you really come on. We've known each other for years, and you've been in this business for lots, and you've seen lots of things. This has been wonderful. I appreciate your time. For people, they want to find you, they want to follow you, they want to connect with you. Where can they go? What should they do?
Just look to CBRE, do a search for Rick Krause, CBRE. You'll find me, both my email and my phone numbers. So this is a great thing you're doing, Neil. I look forward to this interview. You're bringing the real estate community together, and I appreciate that.
I sincerely appreciate that.
You're promoting it. Absolutely. So
there's a lot to like here in this state.
There is. There absolutely is.
I appreciate being here, Rick. Thank you.
Thank you, Neil.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the 2 of us to get on the calendar and connect. Until next time, keep investing in Iowa.